Well, hello, traders. This is Kevin Garrett with the Top Down Traders, and I'm going to record a video on November 29th. It's currently 10:16 in the morning, and I'm going to talk about a few things that could be helpful for new traders. And I'm going to talk about the bull market and bull market setups. Maybe how you can identify a bull market and little things like that. And I might rant and I might rave. So I may make some comments that might be useful or may not be useful for some. So let's dive into this chart here. So first thing I want you to notice is this is a trading combine for a top step. It's a $50,000 trading combine, which means they'll give you $50,000 for you to personally trade if you pass their test. And they'll give you up to $250,000, and there's other brokers out there that would give you $1 million once you've gotten your skill set and your training complete, so you can really make an impact on your financial future for yourself, for your family, if you have one, whatever your situation may be. But let's dive into this chart. First off, I want you to notice that this is a 4-hour chart. And today I'm going to use the 4-hour chart because the 4-hour chart and the daily chart are both important, but when you're trading during a morning session or an afternoon session, it's going to be the first half of the opening to the second half of the opening, and there's 4 hours per session, if that makes sense. So if you're going to become an intraday trader or a day trader, some people call, a 4-hour chart and lower is something that's important for you to kind of get familiar with. When you become a swing trader, you might want to use, maybe a monthly or weekly or daily chart and go to the 4-hour chart for your entry. But that topic will come up later in the future. However, for now, let's dive into this 4-hour chart. So this is the last 4 hours. Let me blow this up. The last 4 hours of the market on November 28th, which was yesterday. So we had a bullish run-up. Okay. The target, it appears, is to be to the left here, the circle. So I'm going to make a little circle over here. This is the target I think price is trying to go to. So I'm going to put a line here, and then I'm going to annotate the chart, and I'm going to call it buy side liquidity, the target resistance area. If it's resistance and it doesn't break out, if it does break out, it becomes support, and some people call it a retest area. Now you do have another area here, which could be the same principle. Where did it go? There it is. So you have those two areas. Now I'm a bull typically, but I'm also a bear when I need to be if I'm in the market at the time. And being a bull, that means I typically buy low and sell high. It's the reverse when you're a bear. You sell high, or you buy high and sell low. But for now, I'm going to just go over this 4-hour chart, and then I'm going to start annotating this chart. What do I mean by annotate? I'm going to mark up my chart. And the first thing I've already marked up was where I anticipate price going to. And now what I'm going to do is I'm going to mark up the candles high and the candles low, and then I'm going to label these areas as such. Where do I have it? I'm looking for my annotation for a candle high, and it should be in alphabetical order. Maybe it's not there, so I'm going to just create one then. Go to settings, text, candle high, possible resistance / support. Template, save as, candle high. Okay, so I'm just going to create that one. Thought I had it already, but it's all good. Now I'm going to do this one as settings. And I'm going to call this one candle low, possible support / resistance. I'm going to change the color of the line to maybe a red or something. And then I'm going to make sure I have this saved properly. And it's going to be the candle low. Now, I can use this particular annotation for a weekly candle, a monthly candle, a 5-hour candle, a 4-hour candle, a 15-minute candle. And when you learn how to trade, little annotations like this become important. So it's always good to annotate your charts, mark up your chart, and find out what price is going to do. Now for fun, I'm going to add something else. I'm going to add a Fibonacci that's bullish. I'm going to take it to the high of the wick, to the low of the wick, and I'm only going to use the 50% fib. Let's use did I get rid of it? I'm only going to use the 50% fib. Oh, it's already there. Oh, there it is. I don't want this one. I want the one that's yellow. There we go. I want that one. Now, why did I do that, you might think? I did that because it's going to help me determine a pullback area. And I like to take pullbacks after 50% of the candle. Some people call it consequent encroachment. Whatever term you want to give it, is half of the candles from the wick to wick. Some people use the body to body, which is important too. But anyhow, I'm just going to mark up this chart. Now, again, today is Saturday, the 29th. The market is closed. So what I'm doing in this video is giving you an example on how to set up your charts for the market open on Sunday. I'm in America. I'm in the West Coast. So on Sunday at 3 p.m. in my area, the market turns back on and trading begins. So if I decide to trade on Sunday after 3 p.m., I'll have my chart set up because I'm looking forward to the next trading session. And I want to be in the right position. That's to say, the right side of the trade for profit. Now, as I pull back, look at the higher or the bit of fuller picture, I'm going to start annotating areas where price may pull back to, just to give myself awareness of what the market may do. Okay, because it can go any direction, and you need to be prepared for any directions. So as I go and look at this chart right here, what I'm looking for now are things like this, which they call wicks. If you don't know what a wick is, go back and see the other video and looking at these wicks. So these wicks here, I'm going to annotate here, and I'm going to call this sell side liquidity. It's also a short-term low. I'm going to look at these wicks here. I'm going to go to this, the bottom of this candle, the body of this candle. This wick here is important too. These two candles here are very important. We'll talk about breakers later, or this fair value gap, right? So I'm going to go back and put a annotation right there, and I'm going to call that a sell side liquidity too. It's also a short-term low. Okay, so now I have my 4-hour chart pretty much marked up. I can put another one here. I can put another wick here, or another wick, but another line here, and I'll put it on the top of that wick. So I'll do that as well, and I'm going to call this a sell side, potential sell side pullback area, right, or sell side target as well. So I have 3 potential pullback areas, right? If I use I'm not going to go into the other thought I just had. I'll keep this simple. Now that I have my chart annotated from this daily candle, the market's going to have to move out of this price range either higher or lower. I know that because the market moves in waves. And here at Top Down Traders, we teach our students to be profitable, and we teach our students to mark up their charts, be prepared with 2 different plans. One plan is bullish, the other plan is bearish. So you have an A-B plan model. You have a plan A, which you anticipate to continue the momentum and the trend, and a plan B, which might be a corrective wave and potential pullback or change in direction or change in character. So let's tune in, fine tune this a little bit. In fine tuning your trades, your trade setups, you go down to the lower time frame. So in this case, I'm going to use the 1-hour time frame. We're going to fine tune that to there. Oh, guess what we see here? You remember our course on candlestick patterns? Well, what pattern do we see there? Now this is an early warning sign of what the market may do. Now keep in mind, here's a side note. If you're not paying attention, please pay attention now. I don't know what platform you're using, but I'm basically using TradingView, a custom version of it, and I'm going to go from extended trading hours to regular trading hours for a second, and I'm going to look at this for a moment in the regular trading hours. When I see regular trading hours, I see a gap in price from wick to wick. That's letting me know I can anticipate some kind of change in the future. I'm going to take this wick, take it to that wick, and then I'm going to put this, extend this way out here, and I have a template for this. It's a gap in price. Here it is, opening gap, closing gap. Call it a market gap. So this area will become important sometime in the future. When in the future, I can't answer that. But it will become important sometime in the future in regular trading hours. So let's go back to extended trading hours for a second. So now, armed with the information that in the regular trading hours there was a market gap, there is now a higher probability that price will retrace and pull back to this area to refill it, because there were some missing orders there, and it may come back to try to capture those missing orders, or maybe not, but it will return eventually. So now that we went to a lower time frame, I'm going to go a little deeper into the lower time frames to view what is this candle looking at. What is drawing, what are the highs and lows in this 30-minute candle, in this 1 hour candle, and let's see the difference. Oh, so we have a bullish 30-minute and a bearish spinning top on the 30 minutes. Let's go a little deeper. Drill down a little more. It almost looks the same, huh? So we're getting a stall in buyer momentum or sentiment or algorithm trading, because it took out this high, spiked up, try to trap some bulls. Well, they're going to trap the bulls there, pull back. Oh, interesting. Well, we'll discover that next week. Go down to the 5-minute. Oh, okay. So now this is in 5 minutes. We have a 2-candle pullback. Looks like he's want to go higher. But let's look at the wicks, because the wicks are important. This wick on this green candle is lower than that wick. What does that mean? That's really a market structure shift, you guys. It also can be considered a double bottom. Oh, but what we have here, what is this candle? Is that a doji? Almost at the 3-bar crow? Oh. If you guys haven't studied candlestick patterns, go back and review or find online 1, 2, 3 3 candle crow patterns, okay? Because they're very important. You'll see another one right here, three candle pattern. You see a 3-panel candle. This didn't develop into one, but a 3-panel pattern, 3-panel. These 3 candles have a name. So I want you to go do your own homework, research it, and discover that name, and then come back and tell me what you've learned. Alright, so now we're on a 3-minute chart. Remember that 50% wick area I told you about? I like to buy below the 50% because they call it a discount area. It's not a premium, but it's called a discount area. You'll learn that in other videos if you really want to learn how to trade. And I suggest that you spend time reading your charts, annotating your charts, and figure out the direction and momentum of the market for you can be on the right position for you can take some profits. Do this and practice this on a regular basis. You'll get better. You'll start to see the charts differently, and you'll start to make better trade decisions. Okay, so well, at this time, I'd like to introduce you to my YouTube channel, Top Down Traders. Copy this link, go and subscribe. This is not a new channel, but I've only got 6 subscribers because I haven't been consistent over the years. I've been more selfish and not doing videos, recording content. But go and subscribe to the channel, and that way you can get my uploaded information and video comments and chatter when I'm sitting here studying the charts and I want to share my wisdom and share my ideas and help people learn and to grow on how to trade and make some money. It can be your part-time hustle. Quick tip, you don't have to trade 24 hours a day. You can only trade 3 hours, 2 hours, 1 hour a day if you decide to, and still keep your job. And once your trading profits start to double your salary or your hourly rates, then you could A, have more money, B, your attitude would change, and maybe pay off some bills, buy a house, the American dream kind of stuff. Support your family better. So, just to recap on what we did in this video, we started from the 4-hour chart. You have to look at a bigger picture. We have two targets on the buy side. That could change at any time. So you need to be prepared with two different models. You need to be prepared with the A model and a B model. Now let's talk about the A model. I'm going to use this indicator. This is a tool, and I'm going to use this tool. And if you guys remember from the other video from the lower time frame, it appears that the market is coming down, right? Let me show you what I mean. You see that? It came off this high. Now it's pulling back. Will it pull back 50% of this candle? Well, let's go ahead and measure that out from wick to wick. It could pull back to here, retest that 50%, and then go higher. Double click, cancel. Let me redo this. Plan A, pull back, go higher, bullish. I have a template for this. Long side, green. Plan B, cancel that. Let me just get rid of that one altogether. Plan B, pull back, retest, reject, go back to this marketing gap eventually. Or it can do a lot of different things. Boom, 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 boom. But this will be plan B. Are you listening? Short, plan B. So you have a plan A and you have a plan B. You need to make a decision which direction you want to go. Me personally, based on this trade setup on the 4-hour and the further pullback, I'm sticking with plan A. But it can actually do both. So don't let the market fool you and catch you out of position or on the wrong side of the trade. Because the truth is, the market can do both plan A and plan B. But you have to be in the market and control your risk. Don't put a lot of contracts on. I'm not sure what broker you're using, but some brokers like to reconcile their accounts at the close of business. Some let you hold your trades overnight, and it gets more expensive when you do that. But either way you choose, you need to have your trades planned. You need to be able to be in the market in any direction that's profitable, even if you have to take just a few points. If you take 10, 20 points in that small window of time until it starts to recover and continues to the trend of the market, just do that. Be patient and wait for the proper trade setups. So with the proper trade setups, you're going to have to be patient. And how do you find the proper trade setups? Well, you look for candlestick patterns that were taught in other videos, reversal patterns. I like to look at 3-bar reversal patterns personally, but you might like to look at 2-bar reversal patterns. It's a personal choice, but it's up to you. You can control your decision making process. You control your fingertips by entering a limit order, sell order, market order, whatever order you like to choose. And if you don't know what different type of order types are, make a comment in the chat or in the video, and I'll teach you that, because that's important too. Different type of orders you can place. So it's been just over 20 minutes where I've been chatting, uh, revealing information to you, making comments, things like that. This is what I do on my personal time as I look for my trade setups, and I'm not perfect. I don't think anybody is, and if you think you are, trust and believe. If you start trading, you don't need to start trading to realize you're not perfect, right? But you're going to make some mistakes, and mistakes are learning opportunities. And when you start to learn from your mistakes, you stop the insanity, right? So spend some time before the market opens, maybe on the weekends, to study your charts. If you decide to make a commitment to really studying how the market moves, because it moves in waves, you can learn a lot. And guess what? Here's the best part. You can earn a lot. If you become, when you become consistent at this, you can earn more in a month than 60% of Americans. Let me check something for a second. What is the average income in America? Wow. States that have the highest average income: New York, 91,000. Washington, 88,000. California, 87,000. Let's take a look at something here. I'm going to pull up a calculator. Let's talk about New York. I'm going to round this number up to 91.5, okay? Divided by 12 months. $7,625 a month. You guys just seen that live. In New York, the average, now this is average, and we both know there's people who make more than that, right? Right? So, but my question is this: if the average person in New York is only making $7,000 a month, chances are they still don't have no money because their expenses are high. Watch this. Let's find out home price in New York. What's the average home price in New York? Oh, the average home price in New York is approximately $576,000 to $875,000, with specific figures vary by source and location. For example, the median home price data is about $576, while the median sale price in New York City alone is $875. It's important to distinguish between the statewide and city-specific data, as New York City has significantly higher average prices. In other words, every city, every county, every part of town has a different price, right? And you're getting where you fit in. Let's look at a house. And the real estate markets are changing right now. Oh, now it's telling me 800,000. Oh, okay. For what size? Wait. I'm confused. One bedroom, one bath, 2,500, 700 square feet. This is rents. One bedroom, 3,500. That's in New York, y'all. But if you like that kind of stuff, here's one, 1.2 million. Let's take a peek real fast, because I'm in real estate too, you guys. So this is a flipper. Yeah, so they're working on this one. This 1.2. This is the Bronx. In the Bronx, no HOA. Call the property owner. It was for sale by owner. That was 23 hours in Zillow. So this is new in the Bronx, for sale by owner. I don't know nothing about the Bronx, so I'm not gonna tell you nothing about the Bronx. Alright, so back to the video. And then I'm gonna close out this ramp, this rage, this import of information to you guys. Again, my name's Kevin Gare with Top Down Traders. I own the company. I'm an educational provider for trading the markets, both Forex and also futures. If you go back to years ago, you'll see some content that I still have there. I kind of deleted a lot of stuff. I see I got some stuff I need to delete from Forex. That was like years ago. Maybe I'll keep it there for reference points, because I still trade Forex from time to time. And yes, we're open. I do have a website too, but more importantly, I just want to share with you this video content today. I hope it helps you guys. Please like, subscribe to my channel. Help me build the channel so I can help other people. I know times are really great right now. I'm looking forward to a lot of a few more real estate acquisitions here pretty soon. The market's coming down, but I want to focus on trading and helping other people trade, plant the seeds to the kingdom, and those who have ears to hear. And thank you guys for spending 30 minutes with me, listening to my rants, my waves, and my input about the market. And I hope you guys go back and look at the video and get some important content out of it. And remember what the Word of God says in 2 Timothy 2:15. Study, you know what? I'm not going to quote it. I'm going to share it with you. Study to show yourself approved. 2 Timothy. Let's do this. Study to show yourself approved. The phrase study to show yourself approved comes from the Bible verse in 2 Timothy 2:15 and means to be diligent in studying Scripture to accurately handle the word of truth and present oneself as a workman approved by God. Now that's a principle that a lot of preachers use, a lot of teachers use, but it also is a principle for anybody who wants to improve in their life. They have to sacrifice their time and study. This involves making a serious effort to understand and apply the teachings correctly, rather than just reading them, casually reading them. You have to go through this video more than just once and see how trading works for you to learn. And I'm not perfect, you guys. I'm not. I got a lot of bad habits. But when you meet somebody perfect, you better call him Jesus Christ, because that's the only one, and follow after him and make your own choices. Hey, listen, thank you guys for your time. Please, again, subscribe to the channel. That'll encourage me to continue to upload videos to you guys. For me, this is my personal video library where I can reflect on what the market's done and what changes and what corrections I can make. I really do appreciate you guys sharing my journey with me. And if you like what you see, like what you've heard, please like, subscribe. Help me grow my channel, but more importantly, study the market for yourself. And if you have any questions, I'm happy to help you when I can. I do have a private group that we all get online and chat together as a group. Um, that's a paid mentorship or paid course because I like to filter out stupid stuff, right? I just don't want anybody in my circle. Just like you don't want everybody to be your friend, right? So please like, subscribe, and if you have any questions or if you want me to do a video about a certain topic that you're struggling with, I'll be happy to do that. It helps me to be a better mentor. It helps me be a better coach. It helps me be a better resource for our community. Hey, listen, thank you guys, and I'm praying that God will bless you this Christmas year, this New Year's coming, and in everything that you set your hands to do, that God will prosper you when you discipline yourself. In Jesus' name. Love you, love you, love ya.